Thanks for joining me on my market report. My name is Mike, and if you're new to my channel or my videos, my market report is on mortgage rates. We kind of go into what's impacting mortgage rates on a daily basis, whether it be coming from the economic calendar, if it's headline news or geopolitical. Sometimes even the sentiment on the market from investors will even change, like good news is now bad news and vice versa. And being from the outside, you may not be aware of this and be kind of scratching your head like, what's going on here? Well, we're here to explain all that. If you guys are in the real estate industry, this could be a good video for you to kind of follow and kind of get the gist of what's going on with the mortgage rates. So that way you can obviously know a little bit more about what could be impacting homes, home prices and such. If you guys are looking to buy a home or refinance, you're probably kind of tracking where mortgage rates are going. These could be a good video to let you know if it's if mortgage rates are trending upwards or downwards or kind of just remaining the same. Maybe a good time to lock in or hold off. Hopefully this will give you that information you need to kind of help make an informed decision whether to proceed or not. A little bit about myself is I am a loan officer. I do work with a national lender. We're here to answer any questions you guys might have regarding mortgage rates or even about programs that might be available or whatnot. So if you guys got questions, please feel free to ask. Just reach out through the social media website, and we will certainly get back to you guys and answer whatever question you might have. We definitely would love to earn your business, so please give us a shout. Without further ado, we'll jump right in and start off with the economic calendar. I'm going to go over to this other economic calendar because it gives a little bit more information than what's provided here. So we're just going to go over to here. So today's being Thursday. We'll start off with the Philly Fed uh, Index. What that means is talk about the business of manufacturing in the Philadelphia region. Anything above zero is expansion. This is for the month of December. So uh, back in November, we had a 39, which is pretty high. The forecast was supposed to come down a little bit to 30, and it did come down, but a pretty big spike downwards, down to 15.4. So New York Empire State Index came in pretty high yesterday. However, Philadelphia is coming in the opposite. It came in still a good number, but much to a much sharper degree lower than it was before. Now we also got housing starts. We'll start off with the numbers here. And the previous month, back in November, was at 1.52 million, seasonally adjusted annualized units. Forecast supposed to go up to 1.568, and it came in only at 1.679. Well, I shouldn't say only at, because it's actually a pretty good spike at 1.679. So very good numbers right there. And then we also can look at the building permits. Went from 1.653 million. Forecast come for 1.663 million, and it jumped all the way up to 1.712. Now, yesterday we did get the NHIB Homebuilder Index, which showed the confidence level rising. So this is a good indicator of that. Obviously, they're putting the money where the mouth is, so to speak. So we are seeing a spike not only for the housing starts, but even future housing starts with the building permits. Now, every Thursday we get the jobless claims, and we had a 203.7. Let me see here. No, that's a 4-week average. My bad. Jobless claims. It was actually revised higher to 206. No, yeah, I'm sorry, 206,000. Forecast count for 200,000, and it came in at 206,000. So it bumped up above 200,000 again. Then we also got the capacity utilization for the month of November. It remained basically the same, as you can see, at 76.4. Well, a little bit higher. 76.8 was forecast. It came in at forecast at 76.8 from October to November here. So a good number right there. Capacity utilization is important, and it's showing that we're getting a little bit more kind of like productivity in some respects, is what capacity utilization, dealing with what they have. And then we also got November industrial production. So back in October, it was at 1.6%. Forecast count for 0.7%, and it came in at 0.5%. So industrial production only picked up 0.5% in November. Now we got the IHS Market Services PMI, and anything above 50 is considered expansion. So it went from 58 in November. Forecast count for a slight uptick to 58.5. Instead, it downward a little bit to 57.5%, or 57.5. Now we also got manufacturing of that. It went from 58.3, forecasted for slight uptick to 58.5, and it dipped a little bit down to 57.8. So unfortunately, both the services and manufacturing were showing a little bit of a dip right there. So let's get back to our other screen here, and here's the mortgage-backed securities. We're up currently about 28 basis points, touching up on the 25-day moving average, which is looking well for us. Yesterday we only dropped down 19 basis points, so it was kind of fluctuating after that Fed announcement. So we were right around, like, I think 9 to 14 basis points down before the announcement, and then it went down like even 30 basis points. So a lot of lenders were kind of kicking in with worse pricing, and it only settled down to about 19 basis points. So here's kind of what we saw here today. So we saw it jumping from about 5 o'clock in the morning all the way up here, kind of work its way upwards, and now we're right about here is what we're looking at here. And this is West Coast time. All right, so let's take a look back. So what does that mean? Mortgage rates are showing an improvement today, which is obviously good news for everybody, and we are pretty close to where we were earlier in the week on Monday. This is kind of where Monday was, so pricing should be comparable to Monday, maybe slightly better than what we saw on Monday, which is good news for people who are looking to refinance or even buy and lock in right now. Yields came out again. That held off that technical level as we saw. It was providing a good cap, and it was helping us out. So not adding more pressure to mortgage-backed securities, and it's down to about just under 1.43 right now, and kind of trying to fight below its 100-day moving average. Now, what's kind of bringing about this? The headline news today is stocks were kind of up, but then it came down yesterday after the Fed meeting. A lot of the times over the past week, we've been seeing stocks take a beating, and then we got the flight of safety, so that was helping out mortgage-backed securities. And then yesterday, that's what was kind of fueling yesterday's downturn, because stocks started going upwards, taking money out of mortgage-backed securities and putting it back in. Today we kind of saw a little bit of both, but now we're getting a little bit more into mortgage-backed securities because Dow, I think, was the only one that was up. The other two started going negative territory, so it's helping us out. But early on, we had the Bank of England raise rates, so kind of surprised everybody that they would go ahead and raise their basically like their Fed fund index, similar to ours, their short-term rate from 0.1% to 0.25%. And then the ECB came out and basically kind of copied the U.S. in the sense that they're going to go ahead and taper theirs and finish in March 2022. So they're going to increase their tapering as well on there. So this kind of helped move things along for us. By the time our markets opened up, mortgage-backed securities were rising as well as the yields were falling a bit. So that was helping us out. And it's a little more of a hawkish tone. So even though highest inflation is a concern, but because the central banks around the world are basically taking proactive steps to kind of take measures against inflation, that kind of helps long-term rates. So it may not help short-term rates because rates will start eventually going up, but because they're getting because of that, sometimes that helps out long-term rates, and we get a little bit of an improvement in that. So right now I see a lot of ads going out there talking about Feds raising rates, and that's going to raise mortgage rates. Well, it doesn't always translate that way. It actually sometimes helps out mortgage rates. We actually go a little bit lower as a result of that. So maybe that might be a short term, but over long term, maybe it might go up. So just FYI out there that you don't want to always listen to some of these advertisements that gives false information out there. So that's pretty much about it, but we'll take a quick look at see what's going on with the national average for the conforming loan limits. The 30-year looks like it's at 3.18 right now, and the 15-year is at 2.54%. If you're not aware, these do have points built into them. And again, if you're not aware of what goes into a rate, there's really no one size fits all. Rates are basically based on several criteria, and they're all conjoined together. It's not just they take one or two pieces of it; they take all of it together. And it could be built into your FICO scores, it could be built into the type of property, whether it's single family versus condo, townhouse, or multi-unit. It could be also that we got amounts of equity in the property or down payment, depending if it's a purchase or refinance. We got stuff like if it's a single-family multi-unit, or if it's primary versus investment property. So a lot of these are factors into it. And of course, you got to take into consideration: are you looking at a conforming limit loan versus a FHA loan or VA loan or jumbo loan? They have their own pricing as well. So again, so when you're looking at rates, you have to kind of look apples to apples, and when you're talking to friends or family, uh, again, you may not be talking exactly apples to apples in that case. So that's why it's good to talk to an experienced loan officer and somebody you trust and work with. Without further ado, we're pretty much at the end here. If you guys got questions, again, please reach out. We're here to answer any questions we can assist you guys with. If you guys like these videos, please smash that like button, help our channel out. We greatly appreciate you guys watching, and any feedback is greatly appreciated. Uh, and we'd love to be in touch. You guys have a great rest of your day. Thanks so much for watching, and we'll look forward to see you guys at tomorrow's video. Bye-bye.